We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at the US dollar and its cycles relative to US elections and the immediate 1 or 2 years post the US election. Here we have the DXY index daily with a dominant cycle upon it. That is about the 918 daily cycle. And as you can see, the swinging sine wave cycle fits the US dollar pretty well. And we use a sine wave cycle with a DPO to see how well it fits. Now, first understand that price on the cycle, you have to take into account momentum. And we have a momentum indicator here which marries up peaks to peaks and bottoms, here we have the bottoms, okay, and it shows you the momentum. And as you can see here, just recently the last swing up in price was on very weak momentum. As you can see, that's trending down. Okay, so this rally up here, as you can see here, it's very visible. That is weaker momentum. This is stronger momentum, as shown by that. Now, what's important to understand here is that the last election was 2016. I'll draw the line there. And an election prior to that was 2012, about there. That's the end of 2012, and somewhere around 2008, end of 2008. And we can all see that the last couple of elections is the US dollar fell quite dramatically, or somewhat dramatically, after the election. If you're looking at 1 year or 2 year out, the US dollar was lower. So here we're coming up to the US election and we've already got a head start. So normally what comes after the election, everyone's promising all sorts of stimulus and what have you. So we know this election is going to have a bit of chaos in it. It may not be decided for some time, depending on how it goes. But in the end of the day, no matter who wins, they're going to have to get the dollar down to stimulate the US economy. Now, some believe that the chaos would add to the weakness in the US dollar, as the Fed will do all it can to stop the US dollar causing damage to the wider equity market, and obviously causing a huge amount of damage to risk-on assets and obviously pension plans and what have you. So I'm forecasting a deep momentum downswing in the US dollar, which is obviously encourages a lot of anti-dollar bullish trades. So let's just have a look at one or two. An anti-dollar bullish trade might be Bitcoin, because everyone's talking about Bitcoin today with the obviously MicroStrategy and Square now adding Bitcoin to their reserves. Bitcoin has not gone to the upper. Here we have Bitcoin daily, and here we have some moving averages. We've got the weekly moving average of 150. 250 and 500 at the bottom here, and these are just bands to see how far it got. So if we got anywhere near the dotted red line, that'll take Bitcoin up to probably close to 50,000. That'll be something. As we can see here in the cycle here, we've got the Bitcoin on a regular coming up to another bottom, another low. So it's getting ready for rally mode. And we can see we've got a bit of an accumulation phase going on up here. Right, and nice basing. So it's poised to move. And here we've got our graph highlighting our Bartel's dominant cycle search, and it shows which cycles are dominant. I've got the cycle 300 here, the red, and the 1200 with the green. As you can see, the green's got a long upward cycle, and the red's a smaller one. So, yep, let's look here. There's a peak. It's all in line. Now we should be coming up to some sort of peak action here. Now, I do know for the bears out there that there could be an insolvency risk coming in 2021. That still gives us 3 to 6, 9 months maybe of a risk off post-election, lower US dollar, risk on asset move. Another cycle which is obviously coincides with Bitcoin because it's in the same asset class as Ethereum. And here we have Ethereum. We've got a nice base build up here. Come here. If you understand Wyckoff logic, we've got a base build up here. We've got this here was a springboard to pump higher, and now we've got a back up to the creek because this is the creek here. The creek is the last resistance sign, and it's looking pretty healthy. But we've also got a cycle low coming in here. Now we've got a bit of a cycle high pointing there, but I think they could probably the cycle low probably dominate that. So we're right in line for a rally, and this is the US dollar. Obviously, if that goes down, obviously it's going to be, as I described before, it's going to be good for anti-US dollar trade. So Ethereum and Bitcoin approaching cycle lows, which mirror, or so I should say, align with US elections. And I think if the US dollar shows some weakness, and depending on what the poll says, we're probably going to get a crypto market rally, definitely into the first quarter of 2021. So the Wyckoff, the cycles, the patterns are all looking bullish for an anti-dollar rally to see a positive risk-on rally in crypto. Keep an eye on it. Cycles help find regular time and price movements. Thanks for watching.